A very good afternoon and welcome to today's webinar hosted by UOB Bank Malaysia and UOB Asset Management. I'm Darren and I will be your moderator for today's webinar. I'm an investment portfolio with UOB Bank Malaysia. My primary focus is on advising the bank's retail clients on managing and reviewing investment portfolios, while I'm also providing investment solutions based on investment holdings and clients' risk profile and objective. With lockdowns and home offices becoming the new norm, the next big question is, how can people and organizations adapt? How can we continue to operate efficiently and effectively while keeping everyone safe? Is our best interest. Be rest assured, we are trying our best to bring you the latest investment advisory to your doorstep via technology, which that brings us to today's webinar. Today's theme is Global Post-Pandemic Healthcare Market Outlook. UOB's pick on the megatrend ideas are the theme that we identify as having the potential to deliver positive returns over the medium to long term. Investing in sector funds can be a smart way to boost mid to long-term returns while minimizing risk through diversification. Along with the technology sector, the healthcare sector is one of the fastest growing industrial sector. Allow me to introduce our speaker today. Mr. Thomas Lim, he has joined the Director, Head of Intermediary Distribution of UOB Asset Management Berhad in June 2019, and he is responsible for the firm's financial intermediary business development functions. Bringing with him his 12 years of experience in fund management businesses development and wealth advisory. Before I pass the floor to our speakers, throughout the presentations, someone on staff will be managing the chat functions. If you have any questions, please go to the right-hand side of the screen in the auditorium. Just click on the little chat icon and pop them in there. It will be answered at the end of the sessions. Without much delay, I shall now pass the time to our speaker, Mr. Thomas Lim.
Thank you, Darren. Thank you, and thank you everybody who tuned in today. I can see that it is quite a good numbers that we have today. Just to share with you what we're going to do today is that probably to share with you some of the thoughts that we have in some of the key topics. As you can see from the slide right now, I think this 4V has been some of the things that we have spoken since beginning of the year, and definitely coming to Q4. A lot of people is also asking about the vote and the vaccines and all. We will talk about it. And also talking about one of the funds that we could share some thoughts with you. Like what Darren has mentioned, please feel free. I will try to keep this short. And of course, we are happy to probably take most of the time for our Q&A so that we can be more interactive, although we can't meet face-to-face at this moment. All right, so I think with the topics that you can see today's key areas that we look at, volatilities, recovery, votes, and of course, the vaccines. To start with, I think this year has came in very unprecedented. A lot of people that doesn't really come in with prepare for this kinds of year 2020. At least, I think a lot of people will say one of the things that a lot of people say is that 2020 is the worst year for us to do planning. And I think this is a lot of people will agree upon because this is a very unprecedented situations that we have. But that being said, when we look in the Q1, looking at the Q2, I think it's not at most in terms of negativeness. We think that there are still some positive that we can see from the current situations. One of the definitely in terms of the summaries that we look at will be, although we haven't had effective vaccines that comes up in the market right now, but things that's getting back to a normal basis, probably in the new normal circumstances that we call that. But we think that the economy is not that bad that a lot of people think of that we might go into recessions all the way for the whole 2020. And of course, secondly, what we also see over here is that the market has turned much better, turned much faster in the sense on the V-shaped recovery that we have saw earlier on. And we are starting to see that in Q3, Q4, it has built up kind of a square root where Q4 has been starting to stabilize. But of course, we may have other topics to talk about in terms of the uncertainties. Of course, in terms of what we see right now ahead of us will be still some risk or uncertainty that we talk about, like for example, the votes, which is the geopolitical uncertainty, and likewise the virus setback that kind of comes in as far as we're concerned right now. Now, probably just a quick touch up in terms of the earlier topics in terms of volatility and V-shaped recovery. I think this is what we have saw in the month of June, July, that we have saw Q1 has tremendously in very bad numbers because of the pandemics, and subsequently we're starting to see on a global basis there's a lockdown across in Asia, not just in China, but also in Asia or even in Europe and US as well. So we see the GDP number have came down quite substantially in Q1, Q2 or first half of the year. But what we basically see on the other hand is that the lockdown, the economic activity has turned this market to a very cold basis. All right, we have come into a winter kind of. But what it also allows a lot of policymakers is to take a very bold and quick actions in the likes of stimulus package. As you can see over here, that is the stimulus package, that is the likes of the quantitative easing that a lot of people may call it as a money printing. For example, we have seen that across the board. We see that happening in US, in Europe, and the rest of the world. And we also see another things that probably a pin of the sword is that a lot of depositors that we look at, things that is not so happy for us is if our deposit right now will get lesser interest. And this is what happened across the world, including US, including the rest of the world, or even in Malaysia, we see a very drastic interest rate cuts that's happening. All right, so that monetary and fiscal policy that we see has lived up a lot of our expectations, has lived up a lot of confidence to the economy and also to the retail spending or even to the business as well. We see that stock markets and bond markets has turned quickly and strongly. On the other side of it, in terms of the way, not notwithstanding that we do not have an effective vaccine right now, I think in general, how we basically trying to do is to contain the virus via some of the social distancing measures that we have, or stay at home. And after that particular global lockdown, as you can see in the month of March, April, May, a lot of countries are starting to reopen in a more new normal basis, and we're starting to see most of the countries has turned much positive from a business activity perspective, and this is representing from the PMI or Purchasing Manager Index. And of course, if we look at on the other side of it, what we see right now over here is that the worst probably has been behind us, especially in the Q1, Q2 is behind us. We see right now we have more vulnerable, yet it's more stabilized in terms of a footstep heading towards the Q4 or even to the Q1 next year. All right, and of course, we think that the growth was starting to climb up, especially when the business and of course the economic activity is starting to recover. And that can be seen not just from the economic data and some of the major data, even something that is closer to a man on the street. Like for example, in terms of the unemployment rate, at one point we can see that during the lockdown, it has gone as high as close to 15% for US. But subsequently, we are starting to see that it has came down quite quickly, and now it's below 10. And we think that this particular phenomenon will be able to continue, and that also reflect on the other side of it. When you have jobs, you may starting to do some spending as well. And we also see on a global basis, spending has turned slowly back to normal. All right. So probably another quick topics in terms of the vote and vaccine. I think this is a hot topics that a lot of people talk about. Of course, over here, we think that US elections are still going to be in a very high volatility source of it. At this juncture, from some of the source that we have, or in some of the poll that we have, Biden still lead quite a fair bit. But of course, we will continue to see through all these situations until November 3rd, and we will see how is the things going to go on. As far as concerns, Biden is still leading in terms of the poll. And of course, on the other hand of it, in terms of vaccine, in general, we still continue to see that there are plenty of potential vaccines that comes in. But of course, if you look at some key candidates, that probably be about a handful of them, like about 8 of them altogether, that is in the phase 3, that some of the names has continued to be on the mainstream of new media. Whereas, of course, if you can see, there's 2 approved. I think this is pretty much not yet so much on the FDA, but in respective of their country, in the likes of China and the likes of Russia, where they have so-called declared that they have a approved vaccine that probably more on an emergency use as far as concerns right now. On the other hand of it, for more on mainstream basis, at this juncture, we have about 8 candidates in the phase 3, in the likes of Oxford with AstraZeneca, we have Moderna, we have Pfizer, we have Casino, which is China. We're still working progress in terms of finalizing the data so that it will be very much on a global approval as well. All right. Of course, now as we speak, probably there's another one that is supposed to put under the approval will be remdesivir from Gillette. At this point of time, that's approved by FDA. Okay, so with that, if you look at the current situations right now that we have saw over the last couple of months, or over the last 9 months or 10 months, in general, I think a lot of people do have this particular question, is that the equity seems like has gone quite a fair bit. At a hindsight, is there a potential for us to talk about investment in Q4 or heading to Q1? In our opinion, we think that in general, as far as we're concerned, over the Q3 and of course also in the Q4, we do see that the actual runner or beneficiaries in the market is basically more sector basis. Like for example, in this case on the slide, you can see that the tech names is pretty much the one that has benefited, and of course that has lead the stock indexes. All right, but it has not been the same case for the rest of the sectors, being the likes of healthcare, being on the likes of the general markets, or being the likes of the others, such as the dividend stocks, for example. So we do think that there are still room for equities. Probably the potentials will be at some other sectors as well that will pick up the pace to start to recover. All right, so that's where we still think there's potentials about that. And with that, I quickly move on to one of the funds that we have prepared today to share with you. And of course, while I'm talking, my colleagues will actually share the fact sheets and also the brochures on your screen, so you may be able to download it. Of course, like I said earlier in the beginnings, please feel free to put any of your questions or remark that you have in our chat box, and we will pick it up and discuss in a later bit of this. So quickly move on into one of the funds that we have today will be United Global Healthcare. So if you look at from the chart or a slide that I showed you earlier on, one slide before, we can see that in terms of equities, equity has done well, but in a general context, if you look at specific to the sector basis, actually most of the sectors has been still laggard. The only runner or beneficial in an obvious manner is basically technologies. And it has surprised a lot of people that this is a healthcare crisis or healthcare pandemic that we're talking about, but how does it happen that healthcare is not really running as fast as the tech? First and foremost, I would say that in terms of the United Global Healthcare, we do not really advocate it because of the pandemic. In fact, this fund has launched last year. And the reason why we basically bring this fund into Malaysia is not about COVID-19. We have no idea that it happened this year. But what we basically see over here is that the innovations, the room of growth for these particular sectors moving forward is tremendous, and we think that this is something that investors should look at as a sector of itself. So if you look at this slides over here, you can see that in terms of healthcare, it is a healthcare sectors that has been hit by many people for many years or decades. It is not a new sector by itself. But if you look at it more specifically, you can see that in terms of healthcare, it's quite huge, it's massive, and with a lot of products in the line. For example, as you can see over here, there's supplements, there's aesthetics, there's vaccine, there's surgeries, there's also a treatment cure in terms of surgery, a part of it, or even also in the aging, like for example, your pharmaceuticals and your drugs, for instances. So there are actually big sectors by itself. And if you look at the subsectors, looking at this particular charts over here, they are a certain part of the subsectors probably is more steady, but on the other part of it, there are a lot of innovation development that is exciting, that excite us a lot in terms of this particular healthcare sectors. And of course, on the left-hand side, as you can see from the screen, the healthcare services in the likes of your hospital, medical insurance, or managed insurance, or managed healthcare is where the steady eddy, you give a commitment of amount, you get a fees, and you get a service. So that is where the consistent stabilities. Same thing goes to some pharmaceuticals, where the medication supplements is continue to be on a very steady mode or growth. But on the flip side of it, if you look at on the right-hand side on the biotech and medical equipment, that is where we think there is a lot of excitement is happening in the next couple of months, years, or even decades that we see, especially with the new development of technology and understanding of health science. So if you look at on the biotech, for example, we think there is a lot of new drugs coming in, a lot of breakthrough in terms of treatments that previously we were unable to cure. And of course, on the medical equipment, with the big data, AI, robotics, a lot of advancement in technologies, it brings a new life in terms of medical equipment. So just quickly to move on into some of the points that I have just spoken, just elaborate a bit more. I think this is without a doubt in the demographic, larger populations, aging population comes in, the demands for healthcare will continue, and this is something that has given a very strong fundamental base why healthcare will continue to grow on a basis. But what is also interesting and excites us a lot is because of a human genome, or what we call DNA. So in the very, very much earlier, in 5-10 years back, probably DNA is just a very normal things, or I would say is that it's very least that human know what is DNA all about. But over the last couple of years back, we're starting to have what we call a human genome project. We are now be able to sequence, do an encoding of our human DNA, which is the very raw basis of a mankind. And that tells a lot in terms of how this mankind being built, human being built, what kind of disease that potentially you may have, and what is the defections that we have. And that is where the root cause that a lot of new disease can be cured. And we think that excites us a lot. And that's pretty much where we bring you to this particular slide. The gene therapies, the immuno-oncology is some of the things that is giving a very big part in terms of this DNA or gene therapies, which we think that it gives you a lot of potential, because previously most of the treatment that we have is talking about giving some medicines that you can trying to build up your immune system to beat it, or the other way is that we do surgery to cut off some things that we would not want to. But when we talk about gene therapies today, we talk about using our own immune system. We are using our own new development of technologies or treatment that basically adjust or to rectify the defect in the DNA sequencing. And that is a lot of potential, especially for those disease that previously will not be able to cure by doing surgeries or doing drug stickings or medicines, because that is a gene issue. And we see that there's a lot of potential there. And of course, immuno-oncology being a cancer treatment, and of course, medical technology as well. So I think in terms of innovations, definitely you may hear a lot about how treatments has been done, immuno-oncology has been done by immune system. But something that a lot of people may not aware is the technology has been built also in this particular healthcare services sectors. A lot of people may not find that what is some advancement in technologies about healthcare. All right, so probably I just share a quick one with you. On the left-hand side, probably this is what we probably able to imagine when we talk about surgery. But as time goes by, as I say earlier on, with the advancement of technology like robotics amongst others, you can see on the right-hand side on this screen, the surgery doesn't go the normal way anymore. Today, there are a lot of surgery that is using by robotic surgeries, which as you can see is on the right-hand side, for the more accurate and more precise. And of course, with this new development, what is also helped us is that the wound will be much more lesser or smaller in that sense. It helps you to heal faster, recover faster, and it reduces risk for infections. And that is what you want also when you success from a surgery. And this is some of the development. And of course, the development doesn't stop there. This is where you can see the doctors or surgeons who sits there and control the robotics by itself. One of the stock that we basically own as well has advanced that particular development further by doing some kind of AI and also some kinds of robotics, whereby the surgeons will be able to do a 3D scanning of the patients. And of course, they can do a simulations before getting the patients into the operating theater. They want to make sure that every single step is what the doctors want, the surgeon wants. They will simulate the result. If that is what they want, they will then bring the patients in to do the surgeries, and the machines, the robotic, were starting to do all that. And that's what you can see over here. This is pretty much on a spine surgery that we have over here. Of course, we know that spine surgery is one of the surgeons that has to have a very low margin of error. All right, so you can see that how you want to screw that particular tool screw down in, what is the degree, what's the angle. This is something that you can do simulation, and as you can see over here, the surgeon basically is standing next to it rather than hands-on to that robotics. So that's the new development in terms of surgeries. And a lot of people may also ask in terms of what about those which is more retail, more closer to us, that is a day-to-day use? Do we have any development on that part? In fact, we do. I think when we talk about glucose tests, All right, most of the people will come up in the images, which is on the left hand side on the screens, is you pin on your finger, get some blood, put in this particular device, and read what is the reading so far in your glucose. This is where the current situations that we are running. Of course, there is some setback. The setback here is that you can't be pinning yourself every single second and minute. All right, so your reading will be distorted from time to time. But what we basically see is over here with the advancement of technologies, there's these new innovations on the right hand side that testings and monitoring is just a patch on your shoulder, and you can link that particular device to your phone, to your smart devices, that you can track your glucose level as you go. It's a continuous glucose monitoring. And why do we think that this is a very big breakthrough is because a lot of disease or patient, one of the existing or pre-existing disease that they have that is very important, that a lot of doctors is focusing on, regardless of what kind of disease that they have, is a glucose, diabetes, for example. And that's something that we think is a very good demand behind this particular device moving forward. All right, so that is some of the thoughts that we can share with you in terms of what is happening in the healthcare. Is notwithstanding, it's a single sector, it's a very massive sectors altogether. And there's a lot of development and technologies advancement is happening. And with that, I introduce to you this particular fund, the United Global Healthcare Funds, with some of the unique propositions that we have. First and foremost, we have a very, very impressive team behind. Our business partner, Wellington, has been one of the very strong experts in this area. The manager that you see over here on your screen, a lot of them, or most of them, basically is a scientist, is a medical officer prior to this, or even some university professors. They are all in this particular medical industrial prior to fund management. And you need that simply because a lot of all these terms or jargons in the medical or immuno-oncologists or the likes of the gene, you need them to be able to understand what is it all about, not just from a financial guys that we look at the P&L and all that. And that's a very, very strong differences that we have put on behind the funds. And Wellington is not just only managing this fund, they also manage a lot of strategies across the globe. At this juncture as a firm, Wellington has managed about over 70 billion US dollar altogether on healthcare strategy alone. So they have very good resources in terms of the capabilities, experience, and the size. And of course, that brings us to our fund performance. Of course, since we launched last year in Q3, we have seen the fund performance, notwithstanding it has been affected quite a fair bit during the pandemic, which is in the month of March, April. It has recovered quite sharply. As you can see over here, our fund has up as of early October, close to 30% from the beginning of launching last year, as compared to our benchmark or our peer, which is about ranging at 18 to 19%. So some of the strong advantage that we have over here is the capability that teams have. And that particular important point that I would like to elaborate a little bit further is because the team, because of their experience, their exposures, their understanding about this industry, it leads us to another part of it, which is not just follow the index, but also look at what is going to be the next upcoming development or stocks or even treatments. And that's why you can see in terms of our fund, we have some tilt positions towards to the mid cap and the small cap. One of the key areas that we also give us the outperformance as well will be the mid cap and small cap, because in the mid cap and small cap, that is where a lot of that potential next upcoming treatments and advancements going to comes in. Since many years back, because of gene therapies advancement, the gene sequencing, and the outsourcing, the technology advancement, the barrier of entry for biopharmaceutical company has continued to came down. And we see more and more small mid-cap companies that focus a lot in certain area has done very, very well. And that's the reason why we think that we should take some position in the mid-cap or even to the small cap. But of course, this is very much on experts only. We need those experts to know what they are buying, the potential, and so that they can invest into this area. All right. And of course, this is something that we can see from our performance. And of course, some of the stock examples that I can share with you over here. You have stock M's over here that have done pretty much well in terms of one of the treatment disease for our heart. There's a heart disease whereby the way that your womb is able to pump up the drugs, pump up your blood and also your oxygen into your hearts. And this is something that is a lot people behind it in terms of innovations, and we see that happening in one of the stock that we are investing into, which is StockM, doing quite well. So when they announce that they have a breakthrough in terms of the advancements of their trial, we have seen the stock has jumped up about close to 60% at one point. And of course, that is not just the end. A lot of stock that we can give you a very, very good example in the likes of, for example, cancer treatment, like we mentioned earlier on. So out of the cancer, one of the top 3 cancers that a lot of people may hear about will be breast cancers. And we also have some stock that is doing quite well, very advanced stage in terms of advancements of treatments. Stock E over here, which is Japan company that do quite well in terms of advancement of their disease. In fact, they are getting to a phase 3, which is getting closer to a approval from FDA and the rest of the drugs administrators in order for these drugs to come into the market. So there's also a very encouraging position as well. Last but not least, of course, we also see a lot of new diseases that is coming to with gene therapies advancements. Like for example, over here, Alzheimer's, for example. So this is something that you can only, previously what is happening is that you can only use the drug to slow down that particular disease. You can't really do surgery to take out. There's nothing for you to really take it out. All right. So with the new gene therapies and all, so that's where the advancement that comes in to actually improve the situations, even in the likes of Alzheimer's, for example. So this is where some of the breakthroughs of innovations or progressive of innovation that we have seen in the treatments and also in terms of technologies of meditech, for example. Now, another side benefit that we may have from this particular fund because of managing in terms of some of the stock in the mid cap or the small cap is what we see the M&A happening in the healthcare. So just to give you an understanding over here is that with the merger acquisitions that we have, that we talked about in terms of healthcare, it binds that all the way back to a very simple reason is because a lot of large cap company, what they are going to face for the next 2 years to 3 years is what we call a patent cliff, meaning a lot of good drugs, a lot of very profit-making drugs is going to expire in terms of the patents. So this big company will come to a point whereby their drugs will lose their patents. They need to find something new, something money-making for them. And this is what a time where this large company will have to think about. On one side, should I use the money to start all over again for R&D? Or on the other side, using the same cash of money to acquire some company on a mid cap or small cap that do quite well in their development, all right, the progress of it. And that's what we also see the progress of both happening on the side of R&Ds, also on the sides of merger acquisitions. We see plenty of merger acquisition happening even during this pandemic period of time. One of the companies that we saw just happen over the 1 month or 2 ago is this particular company called StockM that I have shared with you earlier on, a company that focuses on about heart disease. And this is a company that has been acquired early on, being announced, acquired by Bristol Myers, and the stock price has jumped substantially. And of course, from the time that we buy and acquire this particular company until we sold off because of the merger acquisitions, we have made about 400% from the stock alone. That takes us about a year or so because of acquisitions. And the other stock that probably I just could share with you quickly before we end the sharing is this particular stock F, which I think is very, very much a classic example. When we talk about combinations of immuno-oncology, we talk about the merger acquisitions. This stock F basically is a stock that we have bought in last year in about August 2019. And end of the year, which is December 2019 and January 2020, the company has announced a very good advancement in terms of their treatments of immuno-oncology. All right. In short, they basically give a markers to those cancer cell so that our immune system, our white blood cell will attack the cancer cell by itself. So there's very strong advancements there. And when we head into pandemic, even so, there is a time when we hit into pandemic in the month of March, April. There is an announcement that Gilead Sciences, which is a company who produce the remdesivir, if you hear this name, decide to acquire this company, Stock F, with a very substantial growth in terms of percentage of premium in the stock. And since then, from the point of our purchase until we sold it off, we make about 1,000 percent altogether. So that's basically a classic example for us to show that today, in terms of a business as a growth, immuno-oncology is one big thing that we are seeing that. And of course, a lot of industrial player is also seeing the same thing. And that's what we can represent or reflect from this particular trade that we have on StockF. So with that, probably I will quickly end this part of it. So in short, as we continue to emphasize that healthcare is not something new, it's not something coming very recently in terms of the sectors. It has a very long-lasting history. But what we basically see over here is that over the last couple of years, a lot of health science and technology development have bring a new life, new growth potential into these sectors. And with that, of course, you can see the product life cycles, the business life cycle have continued to be expand continuously. And we see this healthcare sector is a very good sector to invest into on an evergreen basis. And this is, of course, with that, I will end my presentation. And this is our current situations or position that we have as of September. Altogether, the size that we have about close to 1.7, 1.8 billion as we speak right now. And of course, we have a top 10 holding and some of country and sector allocations that we have. And of course, you may also refer to the fact sheets and brochure that we have shared with you earlier on. With that, I will end here and pass it back to Darren. Thank you.
Thank you, Thomas, for the insightful and comprehensive sharing on the markets and the funds. We will now invite everyone for a Q&A sessions. Should you have any question for us, you still can pop them up right in the chat box in this auditorium. Right? Let me see what the question we got here. Okay, the first questions. With the COVID-19 outbreak still in the picture, is the fund tapped into the opportunity to invest into companies that potentially produce the vaccine for COVID-19? Over to you, Tom.
Sure. Thank you so much for the questions. First and foremost, like I mentioned earlier on at the beginning, we don't basically invest or manage the fund of healthcare because of the COVID-19. We think that it is probably a temporary situation. What we see is a mid to long run in terms of the innovation and development. But to the answer to the questions, we do have some stock that is part of the positions running at the COVID-19 vaccine at this point of time. Of course, if you look at the fact sheets that we have, I think easily, or I can share with you over here, the top 10s on the screen right now, you basically can see easily 2 names, if not 3, of the company is a front runners of the vaccines developments. Of course, we think that we are not going to make a big fortune because of the COVID-19 vaccines, because there's probably a more hard rather than just a business for long run. What we basically see is a lot in other areas as well. Of course, there are also some companies that probably will also somewhat benefit from a COVID-19 design vaccine, will be the tester providers, tester manufacturers that we have over here. So even before, we have the COVID-19 vaccines that comes in. The tester is something that we continually, even when we have a vaccine, I would say is that the tester kit will still be in demand, because if you look at it, a very strong importance that they continue to emphasize is testing, tracing, and treatment. So the treatment probably is part of it probably come from a vaccines, but as we goes along until we call it a day, the testing kit was still very much in demand, and also there are some companies who already benefit from that. Yeah.
Thank you, Thomas. All right, we have a second questions. Let me rephrase the structure of the questions. Okay, the second question is, why should I invest into healthcare sector rather than diversify into other sectors such as tech sectors?
Sure. Thanks for the questions. Of course, I feel that the questions is a bit contradict myself, because at the first place you want to be diversified, but you are making an example of a tech single sectors alone. But of course, just to answer that questions, I would say is that there's no against it. I would say is that the way I would look at it is that healthcare may not or should not be the first fund and the only fund that is in your portfolio. Let me just make sure that is happening. But probably in the extent of more positions in beside of diversified, if you talk about from a sector to sectors on types of investing, probably when it comes to sector specific, probably healthcare will be one of the area that you can look at. probably even alongside with the likes of the tech and amongst others. Of course, like I said earlier on, there's nothing to be against it. I would say that exactly to your point, probably that also is a step of diversification. Instead of only investing into tech, probably there is something that can run hand in hand together. But on top of it, I would say that aside of that, I have continued to mention about the development, innovations, and all that. You can see also in the earlier stage or earlier slide that I have shared with you. If you look at the recovery, tech as a general, all right. Of course, we can argue on a subsector perspective, but in general, you can see that the tech has gone quite substantially leading by certain stocks. But whereas if you look at from a healthcare perspective, I think they are rather at the beginning in terms of recoveries of post-pandemic. So we think that there are still plenty of opportunity within that sectors as well. So yeah, that's my opinion there.
Right, thank you, Thomas. We have few more questions, so bear with us. So the third question would be, nowadays, people are more aware of healthcare and many have started investing into healthcare industry. So one of the participants actually raised the questions that whether now consider for latecomers to invest as, those who will be easily caught in investing at a high price.
Sure. Probably to answer that, I will break it into two parts as my answer. Part number one, of course, if you see is that whether this is the most expensive point, I would say is it may not necessary, simply because I think the portfolio has continued to be in the changing. Just to share with you, the portfolio that we have, we are sitting about 140 to 150 stock as we go over the last couple of months. And I would say that it's a very, very diversified positions where we have some position which is very much a big cap. We also have some position in the small cap and mid cap. But of course, within the mid cap and small cap, we don't start in a big way. We start a position as it goes along the developments of the treatments, on the development of their trials and the development of their development of R&D, we will add bit by bit. And that is where I would say is that in terms of subsectors, they are also area that is not recovered yet within the healthcare services, for example. So we think that there's also opportunity there. That's part one of my answer. My part two answer basically is that if you look at it on healthcare perspective, there's still a very, very, very long way for us to go. I would say is that there will be the end of the healthcare sectors where all the main kind of human being, probably we are gene edited and we are gonna immune for everything and everything. We are not going to get aging. We are going to stay strong even we are 90 years old and so on, or even we are not going to have any surgeries. We are not going to have any scars or whatnot. So probably that is a time where the demand of healthcare is not make sense anymore. Otherwise, we still think that some of the pointers that I make, like for example, development of demographic, the development of the technology in terms of medical technology, medical tech, in the development of treatments, gene therapy, for example. This is something that I personally look at it is just at the beginning. There's still very, very long way for us to say that is the end of healthcare. And I think that we'll continue to hear about this, especially when we talk about the fund price specifically. A lot of people was asking that, oh, it has gone up 10%. Am I buying too high? 20%? Am I buying too high? Unfortunately, the fund has continued to go up higher and higher. And of course, there is a lot of benefit that we have so far. In the likes of, for example, the merger and acquisition that I've shared earlier on. So some of the profit that we have made, we sold off, we take the positions off, we take the cash into some other things, and we reinvest into certain other things as well. So that things has continued to build up our performance over time.
Hi, thank you, Thomas. All right, we have another interesting questions, which is, what are the potential risks that could cause downside to healthcare equities?
If you look at on a stock-to-stock specific, I would say that the policy will be one of it. Second, if you talk about from a bio-pharma perspective, the development of the trial, the development of the R&D will be another things. Just to give you an understanding over here, in terms of biotech or biopharma, why we continue to emphasize that you need someone who really understands these developments or these sectors to manage it is simply because there's a very, very, very high failure rate in terms of R&D. Okay, so you can't just like closing your eyes, everyone is R&D, we just buy everything. No, you can't do it. Probably you will lose more than you win. So that is probably the reason why we need someone who are experts behind this field to invest into it. And that is why if you talk about in terms of biopharmas, you need a very good experts there. And of course, if you talk about stock to stock specific, that potential success or failure will make a difference in terms of your price. That's one. A second, when I say about policy, for example, in terms of drug price, about some others, will be also some things that will going to be negative impacted. Like for example, right now, when you talk about election, there are also some of these informations or news will comes in, which is a headwind for some of the healthcare stocks. But of course, just to share with you in terms of portfolio right now, we basically have very, very minimum in this area because, of course, if you look at it, unlike some other countries where you call election anytime before you get into the 5 years, but in US, a lot of people have a particular concern. Our opinion is that we don't really know US election this week. We know it like a year ago or 2 years ago when is the exact date. So the position have been very much being managed from that perspective. We are more skewed towards to where we think the innovations comes in, or rather less affected because of all these uncertainties about politicals. And so that is probably some of the potential headwind or downside risks that we may see from some healthcare sectors or subsectors or even stock specific in that case.
Thank you, Thomas. All right, we still have another questions. How about fund manager view on US elections and China trade war on global healthcare stocks?
Sure. I think in terms of China trade war, probably at this point of time, we are not the eye of the storm at this juncture. I think that is probably towards the tech, especially. Healthcare may not be that sense at this point of time, and to some extent, we think that probably healthcare is not the one that they want to use because it matters about life and all, and it can comes in a very bad manner in terms of one reputations, of course, from a politician's perspective. But of course, on the other hand, in terms of US election, yes, like I just mentioned earlier on, for a fair bit, policy will be one of it that we see going to be an uncertainty to certain stocks, for example. But like I said earlier on, we don't really know the election like 1 week or 2 weeks before. We know it for quite some time. So the way how we manage it is that we do not really trying to predict who win, who lose, but we are trying to focus on who is probably the outcome in terms of the winner or the successor in terms of the area like the immuno-oncologies, the gene therapies, the one that basically can comes in irregardless. So we think that is where we're focusing on rather than in the area where we are going to back Biden wins or Trump's win and so on. So that's where and how we basically see that situations, and ultimately, most importantly, how we manage your portfolio in the healthcare as we're heading into the the election at this point of time.
All right, thanks, Thomas. Okay, another question would be, what's your take on staggered top-up instead of lump sum investment into healthcare sectors? Which also another questions that might, you can explain further on, could we be the short-term investment in healthcare sector because of this COVID-19? Thank you.
Sure. I think ultimately it is your preference, to be very honest. And of course, I leave the job for your CAs, your client advisor, or even your portfolio consultant to go a little bit deeper from a portfolio perspective in terms of whether it should be staggered or it should be one-off, and whether or not that should be a short-term buy and sell. But ultimately, I would say that if you talk about from a staggered basis, I would say it works both ways, in my opinions. If you look at this healthcare as a long-run business to go, which is, in my personal opinion, I think this is an evergreen sectors in a way. So it doesn't make anything wrong in terms of continue to be like a staggered investments, because this is very long lasting in a way in terms of business cycle and also in terms of the runway that this particular industry gonna goes. If we talk about, is it also make sense in terms of investing in a lump sum and buy sell, I think I leave it that to respective investors. But of course, at our end, I think from a fund management perspective, what is very important for us is to ensure that how we manage the portfolio in terms of transaction perspective, I would say is that it leaves it to respective investor objective. If you are looking at a trading perspective, then that is where you may want to operate in a way.
Thanks, Thomas. All right, we have two more questions over here. The participant basically raised questions, concerns on the funds there because it found that there's a big portion in US stocks. So is it subject to US currency exchange risk?
Okay. First and foremost, if you talk about US stock, probably unfortunately at this point of time, we look at it, when you talk about healthcare, or especially when I talk about innovations and development, honestly speaking, you can't run away by having a bigger size positions in US or even to the extent in Europe, because that's where the guys is sitting in. All right. I mean, just like to another question that earlier on is also asking, let's say, for example, you buy into a tech, you can't really run away from Silicon Valley, for example. So this is quite similar. So that being said, of course, from a country perspective, we don't really buy because of we like US, we like Europe, but it's very much on the bottom up because we believe or we are fit to a certain company in terms of the business, about their growth, or even to the drugs or disease or treatment that they have. On the currency perspective, it is yes and no. Okay. Now, in the yes is because if you have the fluctuations in certain currencies, of course, from stock to stock, we do have the currency fluctuations. But the reason why I'm saying no is because if you look at, of course, I think the PCs or the CA will elaborate this a little bit further, is that our fund basically has also classes which is currency hedge. For example, ringgit hedge. We also have ringgit unhedged, where you can choose. If you are investors that you think that I only want to benefit from the portfolio performance, not the currencies, so you can choose to invest in the ringgit hedge classes, where it will try to mitigate the currency uncertainties. And of course, likewise to other currency classes as well. But of course, for ringgit unhedged, it simply means that your gain or loss comes in from two parts. One, the portfolio, meaning the stock performance. The other part of it is the currency between the dollar and the ringgit. So is yes and no. Yes, if let's say you choose the ringgit unhedged. No, if let's say you are choosing the ringgit hedge class that you have. So we do give investor options in this case. So depends on your flavor, which one you prefer. You can have two options for you in terms of the risk of the currencies, or if you have concern on currency.
Thomas, all right. I see a lot of questions floating in the chat box, but I will actually pick one last one, which I compile the questions, where most of them are actually asking about the fund features. All right. Our healthcare funds, are we actually feeding into Wellington? First questions. The second question is dividend payout. Is this fund paying dividends? And do we actually offering, or are we in future offer any AUD class?
Okay. Probably I answer from the behind. Aussie classes, honestly speaking, we are in the midst of seeing in terms of the demands. That is something that actually in our mind, even from day one basis. But of course, we're trying to assess in terms of the demand, in terms of respective currencies. On the second questions, in terms of distributions, unfortunately, this is a fund that we think is more focusing on growth. So we are not intend to pay distributions. So it's pretty much in terms of capital appreciations instead of distributions. Back to the first questions. So the first questions, sorry, Darren, the first question is again?
Dividend payout on dividend payout.
No, dividend payout is the second question, right?
The funds feeding into Wellington's.
Oh yeah, sorry. Thanks. Short answer, the answer is no. We don't fit into Wellington. To be honest to you, at this juncture, if you were to buy, technically you may have find a difficulty to invest into any healthcare funds that Wellington is managing, because they basically have soft close all their funds that they have. So the fund that you are investing today is basically a United Global Healthcare Fund, which we are the owner of the fund. but we are actually appointing Wellington with the capability and the team to sub-manage that portfolio for us. So that is probably one of the way, if not the only way, at this junctures, or a very limited way that at this junctures, if you want to tap into the capability of Wellington, this fund will be one of the way that you can actually tap into instead of the Wellington fund. So I don't think you can actually get any at this point of time with Wellingtons, and this fund is not a feeder fund. So if you look at our prospectus of PSHS, you can see that we don't fit into any particular fund. So Wellington is basically being appointed as a sub-manager, managing the portfolio for us.
Right, thank you, Thomas. In view of time, it's now the end of the Q&A sessions. I understand that there's still a lot of questions, in our chat box, but I think we will take this, take a full stop here, and we'd like to thank everyone for your valued questions. You can actually speak to your respective clients, advisor, and relationship manager for further questions, right? So last but not least, let's have a quick run through on the portfolio strategy. On the equity fronts, we favor China, Asia Pac, Europe, dividend stocks, and quality stocks and mega trend funds like AI and healthcare. For fixed income, we are keen on mid durations and quality papers. On portfolio basis, we advocate a 30 to 50% mix on equity and 50 to 70% mix on bonds. For conservative and moderate investor, income and multi-asset strategy should work well, as the fund manager has the expertise in rebalancing this portfolio to capture market opportunity. Our approach is to build and customize investor portfolio with core and tactical holdings through our recommendations solutions. During investment periods, our client advisor and relationship manager will be managing or engaging with you to do the periodic portfolio review and rebalancing to achieve optimum returns. Please speak to your respective client advisor and relationship manager if you have any queries. So it has come to the end of today's webinar. A big thank you to Mr. Thomas Lim and UOB Asset Management. And we are grateful for your time and effort you took to share your thoughts and your comprehensive sharing. And all of our participants in today's special events, thank you for taking off your busy schedule to participate in this webinar. Right? With that, have a great day ahead. Stay safe and goodbye.
Bye-bye. Thank you. Stay safe.
Bye.
Everyone.